Today we are discussing the important concept of financial accounting that is called drawings. Now we discuss what is drawings. Funds, cash, goods or any asset withdrew by the owner for personal use is called drawings. Symbols. Following words are used for the proper understanding of drawings. Personal use, household use, domestic use and private use. Type of account. Drawing is a type of nominal account. Means it closes at the end of each year. Drawings results in decrease in capital and assets. Following journal entries are used for the proper understanding of drawings. Number 1. Withdrew goods rupees 10,000 for household use. The word household use denotes drawings. Number 2. Withdrew cash rupees 5,000 for personal use. The word personal use denotes drawings. Number 3. Paid home utilities bills rupees 10,000. The word home utilities denotes to drawings. Number 4. Paid tuition fee of children rupees 10,000. The word tuition fee of children denotes to drawings. Number 5. Purchase car or any asset rupees 50,000 for personal use. The word personal use denotes to drawings. Now we discuss the journal entry of drawings. Debit drawings account. Credit cash or any asset that is taken away by the proprietor for personal use would be credited.
How interest on drawings is calculated. Sometimes business charge interest on the funds withdrew by the owner. When owner pays interest, becomes interest expense and adjusted against capital. That's why debit capital account and credit interest on drawings account. It's a nominal account and is closed at the end of the year. So debit interest on drawings and credit profit and loss account. Calculation of interest on drawings. Now we discuss how interest on drawings is calculated. Suppose owner withdrew rupees 10,000 at the rate 10% for 6 months. Interest is equal to amount multiplied by rate multiplied by 6 over 12 means the owner utilizes the funds for 6 months. 10,000 multiplied by 10 over 100 multiplied by 6 over 12. The answer is 500. In example 2, suppose owner withdrew 10,000 at the rate 10% and utilizes 6 month amount and 12,000 at the rate 10% and utilizes 4 months the amount. Now we calculate the amount of drawings. 10,000 multiplied by 10 divided by 100 multiplied by 6 over 12 is equal to 500 plus 12,000 at the rate 10 over 100 multiplied by 4 over 12 and answer is 400. Total drawings amount is 900.